Table 7 of GSTR 9 pertains to ITC reversal details. In the annual return GSTR 9, Part I covers basic details of the taxpayer in Tables 1, Table 2, and Table 3. Part 2 covers the details on outward supplies. Most of Part 2 is auto-populated. Using GSTR 1, 3B and other returns filed with the government. Part 3 constitutes details on inward supplies and ITC details in Table 6, 7, and 8. Only some of the details can be derived from the data available at GST system. Rest needs to be computed by the taxpayers. We have previously covered details on ITC availed as declared in returns filed during the financial year in Table 6. Table 7A, Reversal under Rule 37. Rule 37 of CGST rules prescribes that the credit is required to be reversed in proportion to unpaid amount in GSTR 2 for the month immediately following the period of 180 days from the date of the issue of the invoice. The amount of input tax credit reversed as per this provision shall be added to the output tax liability of the registered person for the month in which the details are furnished. The registered person shall be liable to pay interest at the rate notified under subsection 1 of Section 50 for the period starting from the date of availing credit on such supplies till the date when the amount added to the output tax liability. However, following are not to be considered for reversal. Supplies made without consideration as specified in Schedule I. Value of supplies on account of any amount added in accordance with the provisions of Clause B of subsection 2 of Section 15. The time limit of 180 days from the date of invoice shall not apply to a claim for reavailing of such credit. It is important to make a clear distinction in the books of accounts within current asset accounts between credit available and credit deferred. Table 7B, Reversal under Rule 39. Rule 39 deals with the procedure for distribution of input tax credit, ITC, by Input Service Distributor, ISD. ISD is required to distribute ITC in the manner prescribed in the Subrule 1939. For the amounts to be shown under 7B would be on the basis of the Input Service Distributor credit note issued by Input Service Distributor, as prescribed in Subrule 1 of Rule 54, to reduce the credit issued by the ISD already for any reason. If any supplier gives credit note to the ISD, then input tax credit is required to be reduced and shall be apportioned to each recipient in the same ratio in which the input tax credit contained in the original invoice was distributed in terms of Clause D. Ledger of ISD is required to be matched for the verification of reversal on account of credit note issued by ISD. Table 7C. As per Rule 42, Reversal of input tax credit for inputs and input services. Input tax credit already availed may be reversed due to multiple reasons. Information to be reported in Table 7 must be derived from Table 4B of GSTR 3B, which the registered person has already reported before filling GSTR 9. Rule 42 of CGST rules describe manner of determination of input tax credit in respect of inputs or input services and reversal thereof. One should report input tax credit reversal pertaining to the credit availed during financial year 2017-18 and reported in GSTR 3B filled for the period July 17 to 18 March as credit reversal in Part 4B, 1 of GSTR 3B. But credit reversal reporting requirement in GSTR 3B is consolidated for input services and capital goods. Reporting requirement in Table 7C of GSTR 9 requires reversal of input and input service credit and reversal of capital goods credit in Table 7D. Bifurcation of these amounts reported in Table 4 B1 would help taxpayer to identify amount to be reported in Table 7C and Table 7D. Provision of Rule 42 requires registered person to calculate ITC reversal into situations. Use of credit for business purpose or for non-business purpose. Use of credit for affecting taxable supply or exempt supply. Detailed calculation steps have been provided in Rule 42 to calculate eligible ITC and ITC to be reversed. Table 7D. As per Rule 43, reversal of input tax credit for capital goods. One should report input tax credit reversal pertaining to the credit availed during financial year 2017-18 and reported in GSTR 3B file for the period July 17 to 18 March as credit reversal in Part 4B, 1. But credit reversal reporting requirement in GSTR 3B is consolidated for input service, and capital goods. Reporting requirement in 7D of GSTR 9 requires reversal of capital goods credit. Bifurcation of these amount reported in Table 4B, 1 would help the taxpayer to identify amounts to be reported in 7C and 7D. Provision of Rule 43 requires registered person to calculate ITC reversal into situations. Use of input tax credit of capital goods for business purpose or for non-business purpose and use of input tax credit of capital goods for affecting taxable supply or exempt supply.
If the given information is beneficial for you, then do like, share and subscribe.